We can help you with this game called real estate. It don't have to be flip or flop with high stakes. We help you get funding. We help you with staging so you can build wealth that will last for generations. Why do it alone when we can all win? We all got your back, so yo, you got this. Practical advice so you can't miss the House of Wealth show with Jennifer and Jasmine, yeah.
Hey everybody, this is Jennifer.
And Jasmine.
And we want to welcome you back to the How's Your Wealth show.
Yes. So just a quick recap of our last episode. We talked about your wealth blueprint, having a financial plan on how you're going to become wealthy. And in that episode, we also touched on taxes. And so we're going to dive a little bit deeper into that. And I think we're going to have a really great show today.
Yes, we are. I am very, very, very excited. Like you mentioned, we talked about in our last episode, all about taxes and just that the concept that taxes are really like one of the biggest expenses that, entrepreneurs face. So we definitely want to bring on a tax strategist, and I am so excited to have Mr. Cheston Bulgin with By the Books Consulting with us today. He is a tax strategist, an accountant, and he is a whiz when it comes to taxation and just accounting in general. In addition to that, he's also my very handsome fiance. So I am really excited that he decided to join us today. So welcome, Cheston. Thank you for joining us.
Yeah, absolutely excited to be here. Thank you both for having me on. I'm so, like I said, excited to share this information and really have the people who want to get it.
I know. So, Jen, thank you for sharing your man with us today.
Oh, yes.
And all his great knowledge.
Definitely.
If you would please, Cheston, just tell us a little bit about your entrepreneur journey.
Yeah, absolutely. So, here's my feeling toward entrepreneurship. For one, is there are certain people who are built for this. So if you're watching this episode, I completely get it. This is something, a calling that you have inside of you. And that's pretty much how my journey began. And without me even realizing it, I actually started my entrepreneurship journey when I was like 11, 12 years old. I learned how to cut hair, right? So I always knew that I wanted to have control over my own life, over my own finances. And, without really knowing it at that time, I did kind of know that that was going to be my access to freedom, being able to do that. So, I became a barber. I was cutting kids in my neighborhood's hair for like $5 a cut. As I had my little group of clients when I was going through like middle school, middle school, high school, even up into college. I also did some DJing. So I was very, industrial and industrious as a young person. And this was all the just raw and unrefined entrepreneurship skills at that time, just as just by nature, right? And I think that's a lot similar to what other entrepreneurs go through. They just realize this is something that they want to be inside of, and the other lifestyle, the job, 9 to 5, it's something that just doesn't make sense, and that's how I've been my entire life.
I would totally agree with that. That it's something that's in you. I can relate with the saying about the childhood, startup. I too used to braid hair for a couple dollars when I was a teenager in high school. Yeah, so
I did it. I had my hands out. I was like, I'm washing dish or two, but yeah, I wasn't trying to go to work. Nothing. No, I had a head start on me, but that's okay. I caught up. So Cheston, how did you get into the area of accounting and tax planning?
Oh man. So like I said, like growing up, this was in me, entrepreneurship, right? And I went to school, really trying to find that whole normal path, what we call a normal path, what the career is going to be, get educated, find a job. And it didn't sit well with me. Even after school, I started another business. I realized, through the process of running that, I did not have the skill sets that I really needed to make this thing successful. I started reading. Excuse me. I started reading because I realized there was a gap. I needed to fill it. And everything I was reading at the time alluded to the fact that I needed to have a skill set called financial literacy. So when I saw that that was a major skill set that I needed, and I've always been a person who was pretty good at numbers and math, it just resonated with me, right? Oh, this is why I like math, because it ties into my whole freedom journey as an entrepreneur. So I dove in.
Awesome.
Even outside of school, I dove into that just to understand what that meant. What is financial literacy? How can I bridge that gap? How can I be proficient at it? Because every book that I read, every journey and story that I read about had some tie to this, right? Understanding the story behind the numbers, right? So that was what really got me into this. Not as doing it as a profession, but really mastering it for my own personal growth in my entrepreneurship journey.
Yeah,
That's
I
cool.
get that. What I just want to interject with what you just said is that, I like that you equated the understanding of accounting to how important it was with your entrepreneur journey, because I was kind of like the opposite. And I think a lot of people, may be kind of the opposite. They start businesses, they're really, really excited about like what they do, the area they're specialized in. But then it's like, you look at the books, and I know when we first met, you were looking at my books like, what? Trying to keep your
Yeah, I was like, what's going on here? You call yourself a business owner? What is this? Yeah, all that. Yeah.
And we a lot of times don't know what we don't know, and don't realize how important that component is. And even if you do hire like a professional, there are some basic things that we should be aware of. So definitely I can appreciate that.
Well, they always say, numbers don't lie. So the numbers are important, and
100%.
Definitely.
Yeah. So I actually have two quick questions. One is like, what are some of the foundational books? You referenced a lot of reading. So what would you say is one of the first books that you really read that kind of like, helped you with learning financial literacy, or getting, that sparked that fire or kept it going?
The one book that stands out, it was an older book, probably one of the first books I had ever read that related to this. It was a book called Wealth Without Risk. And the author, Charles Givens, I believe that's the author of the book. And inside of that, what awakened me was the fact that there's a game that's being played. And it's a game that's normally played by the top 1%, right? So and when I started reading that, I was looking at all the strategies he was talking about, and they just related to leveraging your tax profile, right? That was the first thing, and really the foundational thing he was talking about in that book. And for whatever reason, that excited me. I was like, wow, yeah. Like there's something about coming from kind of two sides of this thing, because I've been an employee, and people who are employees, they get a paycheck at the end of the week or whenever their pay period is. And they look at, the top line there, and they see this is a gross pay. And then at the bottom, they see like, well, that's not the same as a gross pay. Well, what happened? All right. All these taxes were taken out in between, right? And there was really no control they had over that, right? So I felt that as from that one side, just, having no control. And this guy in this book was talking about taking control of that, right? And then how to make that a leverage point for wealth building. Right, so I was really fascinated by that book. Yeah, so that's the number one that stands out. So many other books along the way, and I'll just say that is the major one that set me on the path that I'm on right now.
Very good. So we created this platform to help people learn from some of our mistakes, so that they don't have to kind of go down that same path and that same journey. So what would you say is some of the biggest mistakes that you made along your journey along the way?
Yeah. like like we call these mistakes, we call them like failures inside of business and lessons, right? And so there are a lot of lessons I've learned that we can kind of point up and phrase as mistakes. Okay. And one, and especially in this area, is just not having the rigor. And when I say rigor, what gets watched moves. It's one thing to have the knowledge and the know-how on what to do. And there's a different thing when I have the rigor and the application of the knowledge that I actually have. Paying attention to the things that I know inside of this aspect, reading the story and say, okay, well, I see what it is. This is the reality of it, but I'm me. I'm going to just kind of do my own thing and I'll make it work, right? It's very important to really stick to what you really, really do understand and know about this area, having the structures in place to make sure you are tracking everything that you're doing and taking full advantage of not just taxes, but just everything that the numbers are telling you about your business and your life. I think that was one of the biggest mistakes I kept repeating in my early entrepreneurship years, and not giving things enough time to flourish. Right? Sometimes we want to give up because it doesn't look the way that I think that it should look, and we end up throwing out the baby with the bathwater. Right. So those are some of the things that I've noticed along my way that were a pattern earlier on. And now I see that when you do have all the things that you need in the way of knowledge, skill sets, and drive, and determination, we keep going. We just build the structures and we keep it moving forward.
Persevering.
I like that. Well, you kind of like just piggybacking on what you just said, I was, gonna inquire about the lessons that you learned along the path, but I know that's, I will even piggyback on what you said. Mindset is by far probably the biggest thing, that any of us can, really adopt on our entrepreneurship journey, having the, it's not over until I win type of mindset. And just like you said, rigor, like, okay, this is the vision. This is what I'm setting out to do. And I'm not coming back until it's done. I think, if we all approach our businesses in that fashion, there's just no way that we can lose at all. It's just going to happen because of the determination.
Absolutely.
Yeah.
Absolutely.
So I appreciate that statement.
Yeah, I like that as well. Also, just the reframing of words. I love how you corrected the mistake in saying a lesson. I think that's a big thing too. It's no mistakes, it's lessons. Just like Jen just said, we're not coming back until we're there. So there's just only lessons along the way. There are no mistakes. So that's awesome as well.
Yeah, 100%.
Yeah. So I guess we want to really kind of start maybe with the business structure, because that's the initial part, or however, in regards to setting yourself up successfully with taxes. So what type of structure, I know the LLC is very popular. What would you say? What are your opinions or thoughts on business structure?
Oh man, it is crucial, critical, really, to have that end in mind when you're actually selecting the structure for your business, and it's not a one size fit all scenario. And a lot of people do choose the LLC. It is flexible, which is great, right? When I say flexible, I mean that from a tax perspective, the IRS doesn't really treat it as anything. It's not recognized. It's not acknowledged. Okay. And by default, they end up putting you in a certain category. So, for example, if you're a single member LLC, they default you to a sole proprietor tax-wise, right? So you're no different than a person who just says, I want to start a business, and goes out and just, if you're doing some type of cleaning service where you go out and buy the equipment, everything's in your own name, whatever. That's how the IRS sees you, right? And there are all kinds of, tax exposures that you have if you're not really paying attention to that. And if you're two or more people inside of that LLC structure, they're going to default you to a partnership, which is basically just two sole proprietors getting together and saying we're going to do this business with the combined skill sets and knowledge, right? Tax treatment wise, they're going to be the same, right? So that the LLC structure, the important thing to remember is that you have a choice available, right? You don't have to just by default have that in mind. Now, a lot of businesses that go out and earn income via like self-employment type strategies. And what I wanted to have you understand is like the two sides of that, right? You have self-employed income, which means I'm actually providing a service or selling a product. I'm actually inside involved actively, right? And then there's another side where there's passive income, okay, where I'm not really active in whatever I'm doing, okay? So the first side of that, when I'm active in the business, there's something called self-employment tax that we want to actually manage so that we're not overly exposed to it. And when we're talking about that, most of the time, it is most beneficial to elect to be treated as an S-Corp. The main reason for that is that now I have control to my exposure to self-employment tax. I don't necessarily have to have my entire income subject to this surprise when most people experience come tax time. Why do I owe this much? And even if my income shows zero, as my AGI shows zero, why am I still owing taxes, right? Because I'm a business owner and my business showed a profit, even though I showed a loss in other things like passive income or whatever it is that you're doing. I still have this amount due because of self-employment tax, right? And S-Corp is a vehicle to help you manage that. And there are other ways, other strategies to do that inside of the structures that we choose. So many different ways. And it all depends on the end that you have in mind with your business.
Got you. That was like an earful, and I'm I'm like I get overwhelmed. See, this is why you need people like him in your corner, because he loves this stuff. He can talk about it all day. I'm sitting back.
Let's go. Knock it out. Yeah.
Like, oh wow. Okay, so going back to that, like you said, Jasmine, I think most people, like when you start talking to people, everybody's like, oh, I just started my LLC. They're posting on Facebook. They're happy. Like, oh, yeah, start my friend. And everybody's like, yeah. And then when you break it down, they really just, so what is there really any real advantages to starting like a single member LLC? Like what is the advantage for somebody if it's not?
All right, yeah, so that's a great question, because there is definitive advantages to starting an LLC and doing business, right? Excuse me. Like the main thing that we want to see is that there are two purposes to any structure. One is protection. The other is taxes, right? So if you're going out there and you just don't form an LLC, you're going in and just being a sole proprietor and dealing with the general public as a sole proprietor. Now I have no shielding because I haven't set up an LLC. And shielding, the structure, is to limit your exposure to every liability just to that one entity within that LLC. So if you didn't have it, boom, there's no protection, right? You may have insurance for your business. Say, okay, yeah, I'm a sole proprietor. I don't have an LLC. I have insurance, general liability coverage. Yeah. And what happens when the insurance coverage gets exhausted, right? Then the insurance company decides not to pay the extra limits because of whatever technicality, or you just don't have enough coverage. That's a liability on you. That's a liability on your family, for everything personally as well. So one of the main reasons that you do want to establish a structure like an LLC is for that protection. It has nothing to do with taxes on that side, but it's really a smart move to limit your exposure to just general liability from having a business.
Gotcha.
I love that explanation. That's really good.
Yeah, I got that. Okay.
Yeah.
So we just burst a lot of people's bubble on their LLC. What they thought was like, oh, I'm saving tax. No, you're not saving taxes. You have a strategy. You don't have a strategy there.
You're going to learn today, right? You're going to learn today. We're going to learn today. So I'm just looking at my notes. So, our audience is really geared toward, people who are either real estate investors or looking to be involved in real estate. So, what would you say are some things that someone who's interested in building long-term wealth in real estate should know
about taxes, like some fundamental principles that they should really become familiar with. Look at his face. He's getting excited.
Oh yeah, you know me. I like she talks about like the little twinkle in the eye when you start talking tax stuff.
Pen and paper, like.
No, first off, I just want to say that by getting into real estate, you're awesome. Like anybody who chooses to use this vehicle for wealth creation, I mean that is it. That's the world you want to be in. And we want to have a real clear understanding of what that means for me, right? In your toolbox of understanding, all right? First, for tax-wise, all right, the one, I'll give you two things, all right? Two major things, and I'm going to leave it at that for now, all right? Number one, the IRS is going to see real estate investors in three separate categories, okay? The first category is a passive investor. The second category is an active investor. And the third category, number three, is a real estate professional. Every one of those categories have different tax treatment when it comes to real estate, okay? So what you want to understand about being a passive investor, the benefits of this is that you can get all of your income in the way of just, royalty or passive income. Basically, it's money that comes in outside of you going out directly and earning it. It's portfolio income. Right. And the tax treatment of that is just at your ordinary income tax bracket. So the more you make, you're not subject to what we call that self-employment tax. It's just one tax on it, not the Social Security and Medicare tax. So that's what people want to build into retirement, just that portfolio income that comes in no matter if I wake up in the morning or, and go to a job or not. If I just decide to stay in my bed, that money's still going to come in. So that's the benefit there. And just understand the tax treatment of that is just for your ordinary income purposes. Now, here's where the strategy comes into play, is because, I want to have the benefits of cash flow and minimize my tax exposure, right? So this is the whole beauty in real estate, is that I can do it because real estate has depreciation. It has all of these things called like travel expenses that you can have related to real estate. You have the property taxes, you have mortgage insurance premiums, you have mortgage interest. All these things that you would pay normally, that are deductions, right? So a lot of times you can have property that has a good cash flow for you, but also on paper it's showing a loss, right? So if it shows a loss, well, how can I get that loss and realize that loss, right? So there's a limitation there. Like if I'm just in this passive category, I can't really realize the loss today if I do take a loss on paper. It's only against my passive income. So if I have other passive income sources, I can only take that loss against those incomes. But if I have any earned income, like another business that's like a S Corp, and I'm having some earned income from that, or if I have a job, that loss is not going to have any impact on that income to take it down into the negative, right? Category 2 allows us to do that, which is active. Well, now, because I'm actively involved in this real estate practice, a portion of that can actually go against my earned income, right? I can take up to $25,000 if I'm active in real estate against my other income, all right? So that's beneficial. Now my AGI goes down, which actually reduces my tax liability overall. But it's also limited to that $25,000. The third category is where we want to be if we're actually strategically looking to be a real estate investor long term, because now I can experience cash flow positively and have paper losses that have a direct impact on any other income that I have. All right, there's no restriction on that. So any losses that I take in my real estate can directly reduce my adjusted gross income overall, whether it's earned income, other passive income, whatever. That has a direct impact on the reduction of that if I do take losses. Okay.
Okay. So what was that third one again? Because that's the one that's where I want to be. But what's that again?
Yeah, the third one is a real estate professional. So there are qualifications that you have to meet. The IRS loves their checklist for all that stuff. We won't get into all the checklists because we can spend a whole lot of time going through these. But the key thing to know is that you're going to be a real estate professional. They get the benefits of all of that. Okay. Here's a story for you. I have a client that came to me a couple of years back, and she is a real estate broker, right? For decades, she's been a real estate broker. Because she didn't understand this, and because she didn't have a structure set up right, she was paying somewhere around $40,000 extra every year in taxes. What would somebody be able to do with another $40,000 increase in income? It's because they didn't have to pay that in taxes, right? So this is the impact. If you don't know these things, that could be like a real pain point for you, right? So it's really critical to understand that. There's another side of this. I said there's two things I wanted to share with you about real estate. As far as, the importance of it is to understand. And I was just thinking about it, I kind of lost train of thought. There's so many things, but there was another one there that I just wanted to share with everybody in general about, the real estate portfolio, and it deal around like the structure that you want to have when you create a portfolio of real estate. This was the other thing with this client I just mentioned, is that, everything was in her individual personal name, right? She has businesses set up, and then she wasn't using the businesses to house the real estate. It was all in a personal name. Some people I see come to me and they have a portfolio of real estate and they have an LLC set up to do the real estate, but then we see all of the properties show up in their individual name on their, we call it Schedule E on their tax return, right?
Right.
And that is something that you really don't want. You really want to understand how to position that portfolio inside of the structure. For one main reason is it raises red flags with the IRS. The more Schedule E's documents that you have on your individual tax return, the more the IRS kind of flags that to say, okay, this person needs to be audited. And if that's just inside of your LLC, which is really good and common structure for passive income structures, then it's a lot more clean on your tax return. Right, it doesn't raise red flags, and also you have like one document that goes into your individual tax return that they can just see. Okay, this is just from this one LLC income, right? Whether it's positive or negative.
I have a quick question about that. So I've heard two different sides. Like you should have one LLC and just buy your investment properties under that LLC, and I've heard that you should create an LLC for each individual investment property. What are your thoughts?
Okay, so we're talking about the two sides of business structures now. We have protection side versus the tax side. All right, and this is a complete protection issue.
Okay,
this is how we want to look at that. So when you have an LLC and it's one property under that LLC, well, all of the exposure with the dealings, like say somebody slips and falls on the property, it's just limited to that one property. Right, because anything outside of the LLC is protected, and the liability is inside that LLC. So the rule of thumb, like it depends on what your thoughts are to risk exposure. It is really an individual decision. Right, there's no right or wrong with this. I'll just say that for me personally, it makes sense to have a few properties underneath one LLC because now it's like a cost benefit analysis. I'm filing taxes for multiple entities now. Right, and there's a cost associated with all these entities. So how can I strategically position to still limit my exposure and reduce the cost, the compliance costs that I have associated with owning all these properties? Right. So usually I'll see people with a certain amount of properties under one, and then have another for another set of properties, and have another for another set of properties. Not just one property under one LLC and then another property under another LLC. It just makes more sense to have two or more in one umbrella, then cut the limitation of liability there, and then move on to the next one.
Got you.
I like it.
Yeah. As you were talking, I was just thinking like, I think at least for myself, prior to connecting with you, I really never thought anything about, look at, she's like, look at Jen, like, oh, really? so many great things from connecting with this gentleman. But one of the things that I never really thought about was the whole concept of tax planning and why that's even a thing. Like, why should I even care? Like, I, as a mortgage professional, I deal with a lot of people that, they're investors, they're buying property, and they they just go see, just for instance, I just had a client I was dealing with earlier today who, I asked him for a profit and loss statement and balance sheet, and he was like, huh? He's like, well, I don't have an accountant. I just see my, guy who does my taxes at the end of the year. Like, what do I do? And he was totally blank. And I was like, you don't know this. You don't know, so what is the reason? Why should people really care? And why should they be thinking about this stuff before, December 31st, when it's time to start looking at taxes?
Yeah. It really goes back to that book that initially lit me up about this whole world of it's not how much you make, it's about how much you keep. Mm-hmm. That's the underlying thought process. That's the thing that's in the background. It's not how much you make, it's how much you keep. Mm-hmm. So if we're going with that approach, if we have that in our mindset, it's not how much you make, it's how much you keep, then you'll realize taxes are not something that you think about come January 1st. It is an everyday, all year process, right? How am I positioning myself to make sure I am keeping all of the money that I'm working so hard to create? And there is a pain. I had a call, was it just yesterday, or somebody texted me just yesterday. I didn't even know this person. They texted me. Somebody gave me my phone number. Excuse me. And I could feel the pain in the text, right? Because this was such a shock. I was blindsided. I just didn't know, right? There's that aspect right there. All right. This is one of the reasons that you want to have all year round, just know where you stand and have, if you're not really skilled at this, it is always great to have somebody who has your back in this area that you can talk to, pick up the phone, send a text message. Hey, look, what do I need to do? And have that conversation ongoing, like as if they're a family member, right? Somebody in your corner. Because if you don't do that, there's that, blindsided. I just didn't know. And then the other side of that is what you're talking about, Jan. It's just, I need to get financing and I can't. Something's in the way, right? And it's going to be a process to be able to even break beyond that barrier of limitation. Whereas somebody who's working with a professional all year long, or somebody who's on top of this all year long, they're just ready.
Right. Right.
This is the same thing we saw with COVID, the pandemic, all the assistance programs that were available for people. The people who already had this in order were the first to actually get the funding, the first to actually get the assistance, and before the funds ran out. And the people who you're talking about, it's like, man, I just didn't know. They missed out.
Exactly.
Right?
Yeah.
Right. So
that's a big
you always
one.
want to be ready.
That's a big one. I was, working with people and trying to help them, through that process. And, the majority of the time that, let me not say the majority of the time, but quite a bit, that was the case. People didn't have their financials in order. And I know that was one of the things that President Biden did with, I think the second round. He kind of loosened up some of those guidelines a little bit, because it was being said that certain minority communities were just not getting, equal share of that funding because of that particular issue. But it goes back to, those are like business fundamentals, right? Like that's something that shouldn't be the case, regardless of, culture. Yeah. That should be just, a business fundamental that, people should really understand. So
yeah. We call it mind your business. That's what it is. Mind your business.
Yeah, mind your business. Yeah. And I think that's fair to say that, I always say that I'm a college graduate, but never did they give me a tax class. So unfortunately, if you're not like majoring in finance, or if that's not your passion or your drive, like Cheston, then you kind of suffer. And so it is great to have platforms, or to seek your own education, seek your own knowledge through reading and through visiting wonderful podcasts like How's Your Wealth?
Yes.
But seriously, so it's I don't want people to be offended by us saying that, like you should do it, but it's not a given. Unfortunately, it's not a given. It's not a class in high school. It's not a class in elementary school, which I think it should be. because it is such a big part of our lives. Why aren't they teaching us? But that goes back to like knowledge is power, so go after it. So I'm glad. Thank you for sharing. There was a lot of great information today on all levels, some above my level, some on my level.
Yeah, definitely. Well, I just kind of wanted to even expand on what you just said. Like why don't they teach us? They don't teach us because they don't want you to really know. There is well, I could get into that. I could go down that rabbit hole, but there is a structure. There's a societal hierarchy, and it really is set up for people who have businesses to thrive, and the people that have established or that are established in these areas to pass that on generationally. Unfortunately, a lot of communities just did not have that head start. So, we were playing catch up a little bit, but we definitely have to step back and take that responsibility and recognize okay, maybe I don't know what I don't know. Let me expose myself via, like you said, the podcast like ours, books, and resources like, Cheston here, who, is just a wealth of knowledge in that area. And you see his eyes are twinkling and everything else. And we're just like, what?
Yeah.
You love that tax. You be in there with charts like, oh, well, look at this beautiful chart. I'm like, okay. God for people like that.
Yeah.
They balance the rest of us out, right?
Yeah, that's one of those things. Really, that's one of those things that we really want to actually put into to practice. It's skill sets, right? Teams, partners, building your whole team of folks that can help you build your empire, right?
Yes.
And everybody has their place in that, right? You said it earlier in the call. It's like people get into business because they have a certain skill set and area. They have a passion for what they do, and then it's like, yeah, I really want to do this. And there's a gap. The gap is that I need to understand these really important aspects of business that are really not inside my skill set. But how do I do that? It's not necessarily that I need to develop these skill sets. For me, yeah, I did that. I went out and developed some skill sets, especially in this area where it has made the difference for me in businesses. But not just this area, other areas, the sales and marketing, the structures and the fulfillment and everything that goes into a business. Like, how are you putting together a team to do that? And it's like, well, what's in the way of you being able to actually have that out here in real life? And move it out the way and make sure that you actually accomplish what it is that you set out to do, which is fulfill on everything that you want to create, have the American dream,
Right.
have your freedom, have your life, right? So that's very important. Like what you said, like if you don't go out there and get it, and now that you're watching this podcast, what are you going to do? Right? You have a choice now. There's a definitive choice. What are you going to choose? Right? Now that you actually have access to this, and there is nothing in your way but how you approach life and what you think about life. Right? So let's go get
Move
it,
it
man.
out the way.
Yes.
Move it out
Go
the way.
get it.
Definitely. Well, you shared some, like Jasmine just said, you shared some amazing nuggets. People, guys who are watching this podcast, make sure that you get a tax strategist and an accountant as part of your wealth team, because you can't build wealth if you're paying all your money to Uncle Sam. Definitely get somebody that can show you exactly how to keep more of that money in your pocket.
Yes, I love that.
Yeah, absolutely. You can reach out to me. Reach out to me at Cheston at bythebooksconsultants.com. That is my email. You can also find us. Our website is bythebooksconsultants.com, or you can reach us at youraccountingsuperhero.com.
Oh, okay? I forgot to. What am I thinking about? Cheston is he's your accounting superhero. That is his moniker. And what he goes by. So definitely, if you are needing assistance with, your tax plan, your accounting, your bookkeeping, look for your accounting superhero. He's there to save the day.
Get us to work.
Let's go.
Oh, let's go. Okay, well, again, Cheston, we want to thank you so much for joining us today. You shared some great nuggets, and we're just like, just very grateful for everything that you just shared with us and our audience. Jasmine, do you want to add anything?
No, just very happy. Thank you, Cheston, so much. That was awesome. I feel like we're going to have him back because I still have more questions.
Yeah.
But this is a great start. Yeah, thank you for being our very first guest.
Yeah, absolutely.
Really appreciate it.
I love being here with you both. Definitely enjoy sharing this material with anybody who wants to really get it, because it is important. It is important. It is the thing that can propel anybody to the level of lives they really want to reach.
Definitely.
Good.
All right. Well, guys, we will see you next time. Take care.
Bye, guys.